Madam Speaker, when government finances are saddled with debt, it becomes very difficult to meet our developmental objectives. For nearly 15 years, the South African government has been tabling higher deficits. As a result, government debt is projected to be more than 4.7 trillion in our current financial year, compared to 627 billion in the year 2008-2009. This debt is incurring debt service cost that will average 354 billion per year over the medium-term expenditure framework. As already outlined, the global economy is slowing, inflation is increasing, financial markets are becoming more volatile. The result is that the debt service costs are estimated to be 5.9 billion higher in 2022-23 than it was thought at the time of the February budget. Moreover, the possibility of a major price correction in financial markets is a significant risk. This will affect fiscal revenues going forward. It is for this reason that the medium-term strategy needs to maintain a prudent approach to fiscal policy. We need to decrease our debt burden and debt service costs by reducing our annual deficit. This will stabilize public finances and reduce the fiscal risk. Honourable members, we are making progress in this regard. A consolidated fiscal deficit of 4.9% of GDP is projected in 2022-2023. This will decline to 3.2% of GDP by 2025-2026. A primary fiscal surplus of 0.7% of GDP will be achieved in 23-24. This is 1 year earlier than projected at the 2021 medium-term budget policy statement. We also now expect gross government debt to stabilize at 71.4% of GDP in 2022-23, 2 years earlier and at a lower level than projected in the 2022 budget review. Among other things, this means that we are proposing that no budget reduction are implemented in the 2023 budget. In fact, consolidated government spending will exceed 2.2 trillion this year and will rise to 2.5 trillion in 25-26.